Hi guys, it's Burp here and welcome to today's exclusivity report. There's a couple of interesting points to actually acknowledge and notice, mainly because we are back inside the chart pattern that we've been trapped inside ever since 2021 basically started, right? And well, very recently I've been mentioning how important that was for me to maintain my older views, provided that there would be no close below 28,800s, right? So this very support area marked in the chart by the previous instances of upwards bounces, well, has of course kind of like made me pay a lot of attention to this region 27, 28,000, especially with 28,800s, which was the very low of 2021 in terms of the mid-year region, the summertime and so on, right? And we have just managed to save yet another week outside, or on the upper side of the support boundary there, right? Well, this is of course not necessarily indicative of some immediate like rapid fireworks and an amazing peak, rally, right? Just simply preparing in the preparation. This definitely has some significance to it from the technical point of view. The reason is that if we see a failed pattern and a failed breakout, through a support, through a selling threshold, and it doesn't really close below that support, but it does manage instead to kind of like revert back and close outside this support region, it, instead of invalidating the support, it does validate this, proving that there was enough of demand. Okay, there was enough of demand to basically bounce it back and let the market resume its prior tendency, right? So same goes for the resistance on top, and you can clearly tell how failed patterns tend to perform better in the opposite directions than anticipated, just based on a breakout itself, right? It was, I think, quite apparent, many times in the past, where those failed breakouts, were basically leading to a better performance in the upwards, in the definitely opposite direction than anticipated. So again, broken support could make you think, trick you into thinking that this is bearish, but as long as it manages to reclaim this broken support, it tends to perform better in the upwards direction, right? And for the resistance, if there is an upwards breakout and it fails to hold this new support based on a polarity change principle, then more often than not it tends to powerfully decline right after, okay, as the cascade of long positions kind of like triggers, the stop losses triggers, lots of liquidations come in, and at the same time the crowd start liquidating their positions in the fears of further crash, right, which additionally of course sells off the market. So one way or another, we're looking at a one and the same pattern, which continuously is still back in the game. I did not get the threshold I wanted in order to switch my long-term trajectory, my long-term mindset thinking into more bear market kind of like vibes. I did not get it. Instead, I got a fake out, and yet I got a very confirmation for the fake out so far with a close of this kind of like a tiny low volatility range, uh, inside bar pattern, where you basically have a longer term bar candle and a one that closes right inside, right? This confirms a short term underlying consolidation and decision. And because this is a spinning top, because this is a smaller pattern, it usually tends to confirm some underlying change on the demand supply balance, right? As in the previous trend has seemingly kind of like stopped, right? At least for the short term, and not only by the fake out on the bottom, but actually got confirmed with a entire week of price action being held in the upper range of the prior candle, prior bar, right? So we have a pin bar. We have a pin bar as in the bullish hammer, and we have the inside bar as a harami candlestick pattern, right? So we have two potential candlestick reversal patterns that typically work quite strongly if both align one after another. So I see yet another reason for a potential upwards recovery pullback. Then we have a volume spike, right? Volume spike, which is at least 3 times larger than the prior spike on the prior, volume bar, which is an actual case there. And typically, such a volume spike, means that there was an abnormal volatility, there was an abnormal amount of transactions happening, amount of uh, basically closed positions, which means stop losses triggered, and overall, transactions peak for the moment, right? Especially accounting for declining volume throughout the entire year so far. Then, if we take it to the lower time frames, before we go further into details, we also mark for some abnormal volatility, which is of course here marked in the chart over the ATR, and the ATR itself has also its 24 day moving average run through it, right? So we have a 24 MA filter. We can even make it a 10 MA filter if we want to have it, but it's generally used as a smoothing factor to have some more reliable readings. And we can definitely tell for increase in the volatility, nominal volatility, uh, and typically rapid increase in the volatility both on nominally and on the average, combined with a volume spike, typically will bring somewhat of yet another instance for a potential reversal to the prior lasting trends. And if we account for the volume weighted average price accounted, or should I say anchored at the very peak, then we can tell that this current reading is at 42,573, mid $42,000. Okay, this typically means for now that this $42,000 is a fair price, market price of Bitcoin based on price and volume analysis, right? So we are heavily deviated and standing out, on the negative side of the fair price, if you will, right? So, based on the mean reversion, kind of like a pattern, mean reversion, statistical nature of the markets of the time series, that the price action is more often than not, and sooner than not, the price tends to recover, bring back its reading to the fair value, to its fair mean price. Mean price is a fair estimate of expectations. So we could expect at one point, I don't know and when exactly, I'm not going to give you a perfect date or a time, but sooner than later, in my opinion, Bitcoin should be trading at its fair mean value at around 42,500s, right? So, other than this, we are of course looking at some main resistance at around $38,000, the main resistance locally at $33,000 as well, right? Because the prior support that once broken, polarity change principle flips it on the other side of the coin, and it becomes the resistance. So prior supports which basically used to hold the price action back from falling, tend to work pretty well as resistances. Failed supports tend to form resistances, and failed resistances tend to flip into support side. So I would like to see $33,000 reclaiming. If that happens, potentially the next attractor level could be at around $38,000, which if broken, clears the table, in my opinion, for the mid 42,000s. And if that happens, another breakout, could lead, of course, to new all-time highs eventually. Too early to say. There's, of course, lots of confirmation to be had, but so far we have pretty sweet setup for at least a short-term temporary upside recovery pullback into mid or higher $30,000, which potentially may trigger some longer-term implications.